Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek, seeing mixed trading both grain and livestock. Futures trade right now. Row crops are lower, wheat a little higher, and over in the livestock, hogs lower, but the cattle market is rebounding. And Scott, let's start off there. A wild day yesterday, record highs in the cash market, and we'll talk about where those prices came out in a minute. But I think the big thing everybody wants to know is we scored some key reversals yesterday and all, but the June live cattle futures. So the close is pretty important today, isn't it?
Yes. Thanks for having me. And we've got some technical damage that's making it interesting to see where the market's going to close. How much damage are we going to throw on those charts? So would be nice to see a little bit of recovery after yesterday. But as you alluded, we had some great cash trade. So 190 to 193 in the north. We're looking at north of the $3 in the meat trade happening, and had a lot of 183 bids in the south. So all of those are higher prices, all-time highs. And it doesn't sound like that run is over. They're still packers looking for cattle. As current as we are, as tight as we are, they're still not going to turn down any cattle. So, I mean, it'd be easy to stand here and say, well, we're lower now, the cash trade's done, but there's still some sniffing around looking for cattle. And we have leverage on the producer side. So they still have the ability to say, well, I still would like this for my cash cattle here. So I think that's why June can hang on a little bit better. It's looking quite discount to the cash now, right under the delivery. So I guess the expectations would be that, cash can kind of come down. And when you have a market at all-time highs and you have that blow off top like that, the open stronger, the higher cash, they say the market tops when the news is the best. So Every time we have a little correction in this cattle market, there's going to be that group of people saying that they think the top's in, and that there's a group waiting to try to sell it. But I think we're going to just keep falling back on the tight numbers. The fundamentals are going to stay strong, and we're going to be tight on numbers throughout the year. We still need to find that point. We're going to have to rebuild this cow herd. So there's still a lot of help that we're going to get from that side of the industry, I think.
I'll talk about technically where we need to close today in these live cattle futures, especially like the August. I know June didn't score a key reversal, but where do we need to close to negate the key reversals in those back months?
Well, we was kind of hoping we could at least get half of that loss back that we had, yesterday. Doesn't appear to be the case. We're drifting a little lower now. We're kind of getting in that territory, making some new lows right now, just below that range. So This 172.70 number that we're at right now is a little bit alarming. So maybe it's going to be time to start measuring some retracements and thinking about, how far it could set back. But there's a lot of traders or producers, I guess, that are unhedged. So I think that's adds to a little bit of the nerves here, because we've got a market that went so straight up and the margin calls got pretty significant, and maybe you felt like it was going higher, so you didn't have enough hedges on. So there's a little bit of scrambling for that. Not saying that that's the right approach, but at the levels we are, interested in maybe looking at something. How can I try to dodge any kind of major problems here? But you'll just have to measure some retracements and look back. It could, maybe put the August underneath 170, which is going to seem, quite distant from where we're at when we're looking at that's only about, a long month and a half away. We're trading 190 to 193. It doesn't have me lining up saying I got to get 170 sold, in my opinion. So I think we're going to be able to fight that back off.
Okay. And you would expect maybe some selling of that higher opening this morning. And like you say, hedge pressure part of that. But let's talk about demand, because box beef values, choice cleared $325 yesterday. We're nowhere near the all-time highs that we hit during COVID. Do we have some room to run there, you think?
I believe we do. We get that large correction yesterday, and it makes a lot of people, question, are the highs in or not? But the demand is on solid ground here. We're nowhere near all-time highs here, those COVID highs on the boxed beef. And it's not, I think, even if we get a break in the futures market, it's not that the boxed beef is going to head lower. It's going to have to stay higher, more in a rationing type of fashion. You've got the U.S. Meat Export Federation saying, okay, there's other markets that we'd like to look at, other countries that are interested in our beef, but there's so much question about how are we going to be able to keep that supply up enough to be able to fill those meat cases. So I don't think it's a thing that okay, we've heard some stories about demand is starting to shift towards pork and to chicken, and that can happen for a little while. But rather than the beef come down because of that, I think that's going to raise the value of some of those other protein sources rather than pull the beef down. So I think that it's going to be on pretty solid ground. It's going to have to stay higher. That incentive is going to have to be there for some higher prices. And if we're going to rebuild this cow herd, if we're going to try to keep this sustainable beef industry happening, and that's making me a little nervous that you had the record packer margins and a struggling beef producer, and now you get some very volatile waves. The beef producer still needs a good shot in the arm for that incentive to rebuild the cow herd. To you got some high interest, high feed costs, along with all the costs of inflation that we've seen. So that's where I think this market can turn around, and it's going to have to hold because we're not fixing the problem yet. Saying, hey, we need to start rebuilding the cow herd yet. So
yeah, we're going to need profits for more than just a couple months here to do that, to your point.
Amen.
Okay, you alluded to it. Hog market kind of got some help from the cattle early on here. And of course, the hog market seeing some profit taking yesterday and again today. So I guess, what is it? Did we run up into chart resistance, or did the futures just get too far ahead of the index again? Is that kind of the story, or what's limiting that market?
I feel like it's uncertain times in general when you're looking at Prop 12 in California, and the hogs have really traded to the downside, large downtrend, and it got a nice recovery here. Can't quite get over $90. It doesn't look like a long-term bull market here, but we're sitting here on June 8th and looking at this July when Prop 12 goes into effect, and you just hear so many conflicting stories about how that's happening. Or is the retailer trying to stock up now? That's what I would think is happening. Retailers going to stock up on some of this pork and try to get it moving now while they still can, while they still have the ability to do so. But it's after the fact. What's going to happen? Are we really going to see a slowdown on some demand? So I think that's what's going to hold it below $90 until we just have a little bit more get our heads wrapped around what this looked like, how it's happening, and how much liquidation have we had, which also could help in the long run if we've liquidated down, with the swine, with the sow slaughter. Maybe that's going to help us in the long run. If we know this is coming, we can get a little bit, to some more manageable numbers while that's happening. Maybe we'll be able to fight it off earlier.
Corn is down this morning. We had poor weekly exports, which I don't think were a surprise to anybody, but some rains in parts of Iowa and Minnesota here this morning. And there's more in the extended forecast. So that's really the story here, isn't it?
Yep. It's all about weather here. And we know we've had some of the weak demand stories, weak exports and the strong dollar. So, that we have to look back at that, but we're straight up trading weather, it feels like. And as it got hot and dry and you saw the crop conditions in the heart of the Corn Belt take a pretty good hit on Monday, you would expect that there had been a little bit more action out of the futures on that news. But it's looking down the road. We've had, more of a spotty popcorn rain type of system, and that long-term shift is cooler, wetter temperatures. That's what's coming. So that's what the market's looking at, saying we are going to have some much needed moisture continuing to come across the Corn Belt into the growing area. And with the acres that we have planted, still going to be looking at these big ending stock numbers. And we'll look at those tomorrow again on the USDA report, and we're going to have to digest, that 2.2 billion bushel ending stock on the corn. That's a large number. So we're going to have to look at those big supply and looking at rain coming. It's going to keep the pressure on the grains from here.
Yeah. And just quick on the soybeans, we started off a little lower. Now you've got the July contract. Actually, the bull spreads are working again. That July-August spread is widened out to record levels. So you got to believe old crop is maybe a little tighter than what USDA is printing.
Yeah, it has that feel to it. And plenty of traders talking yesterday about just how many soybeans China is importing. They're large imports, and hard to trust what's happening there. I get it, but I think that's what's probably keeping this July cropped up a little bit, seeing that China is really in high soybean usage right now. So
Yeah.
it's able to hold on. New crop still pretty scared and not ready to buy into any of that. But I would believe that that's what's propping the July up here a little bit.
Okay, thanks so much for joining us. Scott Varilek, Kooima Varilek, and that's Markets Now.